All right. Welcome back to another episode of the Real Estate Investing Club. It is December 8th. We are counting down the days till Christmas, my favorite holiday. Super excited. And it's a good day for another reason, because we have Brian Davis with us here on the podcast. Brian is calling from all the way down in Lima, Peru. He travels all over the world, and he just got out there, or down there, I guess, in Lima 4 months ago. We just had a good conversation about that. So I'm super excited to jump into this. Brian does group real estate investing through Spark Rental. It's a really unique strategy, a unique model that I'm sure you guys will, I'm sure you'll get some good gems of wisdom from. So Brian, thank you very much for hopping on the show.
Gabe, thank you so much for having me. I'm excited to be here.
Absolutely. I told you right before we got on here, we like to start with stories. So take us to the beginning of your story. How'd you get started in real estate?
Yeah, I mean, like so many people, I graduated college with absolutely no idea what I wanted to do with my life. I mean, I really, I was totally lost career-wise. So I just started interviewing with my parents' friends, doing like informational interviews, just trying to learn what people did at, like, 11:37 in the morning on Tuesdays, like, because you grow up and you only know of a handful of careers, right? Like firefighter, policeman, teacher,
Yeah, the
maybe
typical ones.
accountant, or you're like businessman, like
Right.
whatever that means. But you just don't know like what the average person does, and what all these different career options are. So the one smart thing that I did was I just started going around and asking every adult I knew if I could just come talk to them for a few minutes, in the middle of the workday, and just get a sense for what they did. And one of those people was a friend of my stepdad's. He owned a nationwide subprime mortgage lender. And this is back in 2003, when, subprime mortgage lending was cool, right? It wasn't vilified yet as it
Yeah.
became later. So, he offered me an internship for the summer after graduating college, which I took him up on. And at the end of that summer, he said, "Look, we don't need another loan officer. We've got, a million loan officers here at this lending company. What my partner and I need is actually someone to handle our hard money loans, because he and his partner did hard money lending on the side of their day job of running this nationwide subprime mortgage lender." So I said, "All right. I mean, I don't know anything about it, but why not?" So I started doing hard money loans for these two guys. And again, this is back in like the early to mid aughts. Everybody's making money in real estate. It's a big party, right? So, I'm doing loans for real estate investors, guys who are flipping houses or doing the BRRRR method. And I'm like, I'm just as smart as these guys. I'm smarter than these guys. I can do this. So I went out and I started, just throwing all of my savings into buying up rental properties. Did not learn a thing about the fundamentals of real estate investing. Didn't even learn how to accurately forecast cash flow for rental properties. And 2008 just hit me like an anvil to the face. All of that sloppy investing caught up with me, and it was particularly tough because my day job was tied to that too, right? Because no one was doing hard money loans or flipping houses or doing the BRRRR method anymore all of a sudden in 2008. So not only did my investments collapse, but my day job also collapsed. So I went out and I got a totally different job working for an e-commerce company that specialized in selling legal forms and other services for landlords. And that was actually great. I learned a whole new skill set, another business. But I never would have gotten that job if I hadn't been a landlord myself, and if I hadn't been a real estate investor myself. So, all those things that I did wrong, I mean, it's tuition, it's education.
Hindsight's 2020. You never realize what is useful until you've actually, gotten to the next step. And then you're like, that kind of sucked, but it did get me to where I am today. So it's all good.
Well, exactly. And I did not give up on real estate investing, of course. We wouldn't be sitting here having this conversation if I had. So yeah, all those losses that I took, it was the cost of education, right? You just have to look at it as tuition. And in 2016, a former colleague of mine and I split off, started our own company, and Spark Rental was born. It has it has taken a meandering path over the intervening years since. What we thought was going to be our business did not end up really being our business. And that's something that I have learned as an entrepreneur, is that what you think your business is and your vision for it is not necessarily what the market thinks that, that your
Mhm.
business should be,
Yeah.
and it's not necessarily what anyone wants. So that is part of being an entrepreneur is listening to the market. And that
Yeah.
that sounds cliche, but I mean, like,
It's the most
actively listening
important.
to people,
Yeah,
like,
it's the most important
as they're
business
telling
advice.
you what they, yeah.
Yeah. I think it was Sam Zell in his book. I can't remember what the actual quote was, but essentially it was like the secret to his success was he gave people what they want. And I thought that was really good advice because that's all really business is you're looking at a need in the market and you're providing that a solution for that need.
Well, yeah, exactly. So, our original vision for the business was to launch a like soup to nuts property management software platform for like mom and pop landlords.
Mm,
Because at the time there wasn't anything that was really perfect for that. Back then there were still plenty of good property management software platforms for like the bigger property management firms, bigger landlords. But there wasn't anything really great for small landlords. And since then, there have been a few that have come on the market that are better. But that was a total disaster. We had software development companies cancel contracts on us halfway through after taking most of our seed capital, and
yeah.
just disastrous kind of entrepreneur stories like that. We ended up, even before that all happened, we launched the company as an educational website and blog, and we started podcasting and doing videos and all that. And we fell into doing some affiliate. We're earning money from affiliate revenue, which helped keep us afloat, in those early years when it was all very lean. And we ended up launching a course about real estate investing, about reaching financial independence from real estate investing, and that too has evolved over the years. But what we found is people in our audience and our course students, they kept asking the same question over and over again. They kept asking, can we just invest some money with you guys in some of your real estate investment projects? And by that point, I was living overseas. We had moved to Abu Dhabi because my wife's a school counselor, works at international schools around the world. So we had moved across the world to Abu Dhabi. I was not actively investing in properties at that time. My partner Denny wasn't either. She was living, or she still lives outside of Philadelphia. Doesn't like investing in that market, which I don't blame her one bit. Um, so we weren't actively investing. So we kept saying no, 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 and then finally we looked at each other and we are like, well, what would it take? What would it look like if we were to say yes to people who are asking if they could invest alongside of us, if they could partner with us on some deals? So we went out and we partnered with this guy in Michigan, boots on the ground, single family investor. And we did a couple deals with him, and that was fine. The returns were all fine, but it was a huge pain in the ass. I
Yeah.
mean, it was such a pain. It was so much work, buying these single family investment properties with a big group of people. So, Denny and I are looking at each other. No wonder no one else is doing this, right? Like, I mean,
Were
so
you guys doing the syndication model or how were you group investing?
we were just group investing as a joint venture. We just
Mm-hmm.
created an LLC, threw everyone into it as fractional owners in this. And actually, since then, there have been a couple platforms that have come on the market that have started doing this okay. They started doing it decently, but yeah, it was too much work. We also didn't love the partner in Michigan. He was not fantastic.
Mm.
So, we were like, let's go back to the drawing board. And it was around this time that I had discovered syndications and
So
passive real
real
estate
quick before you move on, what I mean JV partnerships, I've done, a number of them and they tend to be what part of it was too much work for you guys? I'm just curious what about the process was different and more laborious than for say like a syndication.
Yeah, well, so a couple things. Part of the problem here was the partner that we had chosen, to be
Mm-hmm.
frank. He, I mean, first of all, he rubs people the wrong way. He was just kind of a jerk.
Yeah, that'll do it.
But I mean, he was the kind of guy that had an excuse for everything.
Ah,
And no one wants to work with people who are not accountable, right?
mhm.
I mean, I feel
So
like
it
that's,
was more the people in situation, not the steps that you take to complete a JV, partnership. Because
well,
I
it
always
was
felt
it
like,
was the combination. Yeah, I mean, so he made things difficult because these deals were not always smooth, and our junior partners, people from our audience who had joined in on this, they had questions. They weren't happy with the way he was handling this. His reporting was not great. So there was a feeling that maybe he couldn't be trusted, that there was a lack of transparency. So all of which just created this huge communication flood where everyone's asking questions and worried and biting their nails about the investments. And it was just too much. And there were decisions to be made because, these were active investments, in properties that we owned collectively. So there were asset management decisions that had to be put to the group. We couldn't make those decisions because we didn't want to get anywhere near that line of selling securities, right?
Oh,
and
yeah.
so if we were making those asset management decisions, then suddenly we would be, selling securities. So which the last thing we need is the SEC coming and banging on our doors, right? So yeah, I discovered syndications, which if anyone's not familiar with that term, group real estate investments, passive real estate investments. People buy in basically fractional shares in a larger property, like an apartment complex, or could be mobile home park or whatever. And I turned to my partner and I was like, well, what if we did a group investment, like within the group investment, right? Like, what if we opened up one of these passive real estate syndication deals to our audience and to our course students? And she was like, well, sure, why not? Let's do a pilot deal and just see what happens. So we did, and we got a good response from our audience. So then we were like, well, what if we expanded this into like an actual investment club, like an actual, traditional
Like a
real estate or a
investing
traditional
club.
investment club,
Yeah, there you
where
go.
you get together every month and you vet deals. But with a more modern spin of passive real estate syndications, and we're meeting virtually, of course, instead of a couple guys in a back room smoking cigars and talking about stocks or whatever. And that's how our co-investing club was born, and it's grown very quickly over the course of this year, or the last 18 months or so. So it's been a lot of fun. It's been different. There's really no one else doing this. The closest thing we have to a competitor is probably Left Field Investors, but they have a pretty different model. So yeah, it's great.
It's awesome. So what so you guys have, you call it a club, but you're basically everybody that you've met through your career, through that course you launched. You are taking deals to them, you're running them through the deal, and then anybody that wants to jump in, you're running a syndication with them.
Okay, so once again, we're not selling securities here either. So we keep this very much in like the traditional investment club model. So we charge a flat membership fee in our club, and that's the only revenue that we have from it. We don't get a cut of any of the money that we invest. Quite the opposite, actually. We're putting our personal money in these deals alongside of our members, just as one more person in the deal, basically.
Oh, so it's not a GP LP structure.
Well,
no...
we are LPs, together in these deals. So what we do is we form a new LLC for each deal. That LLC is the LP, the limited partner investor in the broader syndication deal, if that makes sense. So it takes up one non-accredited investor slot, because I don't want to get too much in the weeds here, but that is relevant here. When syndicators do a 506B syndication that allows non-accredited investors, they can have up to 35 non-accredited investors in the deal. So they tend to be protective of those slots. That's why they can't have people jumping in for $5,000 the way that we do it. Our members can invest with $5,000 a piece, but syndicators can't have that. So that's why we merge all of our funds together under a single LLC. That LLC is the non-accredited investor then taking up one of those 35 non-accredited investor slots in the syndication deal.
Gotcha. And are you guys running the deal yourself, or are you investing in other GPs deals?
We're only investing in other GPs deals. Like, yeah, again, we're not GPs ourselves. We're not selling securities. We're not getting a cut of any of this. We're simply organizing the investment club.
Gotcha. Cool. Yeah. That makes sense. So you go out there, you find GPs, you find operators that are getting deals. You bring those deals to your group. You say, hey, check it out. This is a sweet deal. What do you guys think? People say, I want to put 5,000. I want to put $10, whatever the amount is. And then you create an LLC, you bundle all that money together, and then you invest in that GP's deal as one slot in their 506B.
That's right. Yeah,
cool, man.
That's you summed it up succinctly.
Great model. Yeah. Cool. And so throughout all this, it has allowed you to take on the life of a traveling investor. I feel like this has become its own topic. A couple of people in my group, in my circles, they've taken to the traveling life as a real estate investor. Like they run their real estate investing company, but they are not in the US, they're somewhere else. I always see posts, with them out in the world. I'm like, yeah, that looks like fun. But the details and like the logistics of running that kind of lifestyle, I've always been curious about. So let's switch gears from your fractional investing topic and talk about how your life as a traveling real estate investor, how has it worked? Like what were some of the things that kind of stood out to you and surprised you in terms of difficulty of getting it done, or you know just give us the rundown of your life as an investor that's just out there in the world traveling.
Yeah. So, first of all, there's no one path to do this. I mean, there are, millions of ways. I mean, there's endless
Yeah.
ways to
Right.
go about, uh, you know, becoming a digital nomad or a traveling investor or, an expat, whatever path you want to take. So for us, my wife, like I mentioned, she's an international school counselor.
Mm,
So educators who work at international schools get some really sweet benefits.
mm.
One of those is free furnished housing.
That's
Uh,
fun.
yeah, so so that's how we moved abroad initially. We're from Baltimore, Maryland originally. So in 2015 we moved to Abu Dhabi. My wife actually kind of surprised me. She knew that I love traveling, that I had a sense of wanderlust and adventure that was not really being met in living in
In
my hometown
Baltimore.
of Baltimore. Yeah. So she surprised me by signing up with a recruiting service for international educators. Um, and we went to a job fair for international schools in February of 2015. And within a day of getting to this like weekend job fair up in Boston, uh, she had a job in Abu Dhabi and
Mm.
had several other job offers around the world as well. I
Wow.
mean, it moved really fast. Like, I
That's
mean,
crazy.
so yeah, by August we were living in Abu Dhabi. I mean, it was, so yeah,
So
they
when
put
you made that transition, like how difficult is it to execute your job that you generally do here in the US abroad? I'm sure I mean, internet issues has to be the least of them, but I'm thinking of like tax, issues that you'll run into. I don't know, any legal loopholes that you're going to have to jump through. What is it like investing abroad in the US?
Yeah, so there's when you move abroad, I mean, there are different buckets of things you have to go through, right? There are challenges that you have to, so there's the legal residency and visa piece. There's maybe a language piece. There's the banking piece, and there's all these kind of buckets that you have to just sort out. So the tax, you asked about taxes specifically, so I'll cover that first because that's actually one of the easiest elements of this. So if you live overseas as a U.S. citizen, an expat who's not living in the U.S., you can take advantage of the foreign earned income exclusion, where basically the first, I think right now it's around 115 grand per person. So the first 115 grand or so, it changes every year. It goes up a little bit every year. But first 115 grand or so of taxable income is tax free. And
Wow.
you have to you still have to file a tax return in the U.S., of course, and you have to pay taxes on anything that's above that. And if you're self-employed, like I am, you still have to pay self-employment taxes, which are separate. It's a huge pain for someone who's self-employed like me. Um, but that's a nice tax benefit to being an expat living overseas. And there's a couple ways that you can qualify for the foreign earned income exclusion. One of them is number of days outside of the U.S. every year. Another one of them is qualifying based on your legal residency in another country. Obviously talk to an accountant about that stuff.
Yeah,
That's the
all that
weeds.
stuff.
Um, but yeah, so huge tax break for being an American citizen living overseas. So that helps.
Yeah.
As far as
I'm assuming you still have to pay taxes in the country that you're residing in, especially if you're there for, multiple years. Or is that not the case? I don't know.
it depends on the country. Yeah, in most countries you do. The UAE does not have income tax, so we did not have that
Wow,
in
that's
the
cool.
UAE.
Yeah.
Yeah, so I mean that's one of the reasons why they've been so successful in bringing in expats from around the world and wealthy expats at that. They've actually, I don't want to go down a rabbit hole of, the UAE, but they have really created an entire professional class based just on expats, and their citizens are, I mean, it's basically like a super high-end welfare state where their citizens, either they don't work and they just collect welfare, or they work really, really cushy jobs, making a disproportionately high income for sitting around doing no work.
Right.
Yeah, I mean, and so their labor classes, their professional classes, those are all expats in the UAE. But anyway, that's neither here nor there.
Yeah, that's
but
interesting.
yeah, most countries you do have to pay local income taxes. If you do, you get credit for those back in the US as well, so you don't get double taxed. In Brazil, for example, my wife paid Brazilian income taxes. I did not bother paying Brazilian income taxes because, I mean, all of my income is in the US. I just decided that I wasn't going to file for that income in Brazil. Most countries do not, or a lot of countries do not tax you on foreign income. So Brazil is actually the exception to that rule. They would have liked to have taxed me on my US income. I just decided not to pay them.
Right. I'm choosing to forego this.
But most countries, or at least a huge number of countries around the world, do not tax you on income that you earn back in the US, for example.
Okay.
So, that can get a little bit tricky and complicated, but it's the taxation piece is actually one of the easier components of this. And if you go with someone, if you have a spouse, for example, like I do, who is working there, their employer will take care of the visa for you, and then you get basically like a dependence visa.
Gotcha.
So like
what was like the most difficult part of the transition?
I struggled a little bit with the cultural differences at first. It took me a little while to get over the fact that we were living in a totalitarian monarchy, basically, with no civil liberties. But that's all in your head, right? I mean, and at a certain point I got over that stuff. It was surprisingly easy to make friends in the UAE. Language is not an issue there because it's bilingual, English and Arabic. Every road sign, for example, is in both English and Arabic. All the official paperwork is in both English and Arabic.
Wow.
So language was not an issue there. It became an issue later when we moved to South America, but yeah, so making friends was actually pretty easy in Abu Dhabi and in Brazil. So yeah, I mean, you just have to, there's all those buckets, right?
Yeah.
The hardest thing, the time difference in Abu Dhabi was very difficult from the US. I mean, depending on the time of year.
12 or 13 hours, right?
Yeah, so 9 hours to Eastern time, 12 hours difference from Pacific time.
Yeah.
So that was tricky. I mean, there were times when I was hosting webinars at 2 a.m, my time in Abu Dhabi.
Right.
Moving down to South America, that has, we're more or less on the same time zone. Like right now, I'm on Eastern time. When you guys change your clocks, then that shifts a little bit. But yeah, that's been easy here. Of course, now here I've got the language, so I've been taking Spanish lessons here in Peru and trying to sort that out. But no, it's not nearly as hard moving overseas as people make it out in their heads.
Cool. Awesome, man. Well, we're running down the clock. Before we move on, though, I want to ask, switching back to the real estate side of things, what is your guys' goal? What is the thing that you're going towards? What are you trying to build with Spark Rental?
Yeah, so I'll start with two just core values of our club that really direct everything that we do. One is inclusivity and accessibility. So we only propose deals that allow non-accredited investors. That's a core value of ours. We want to make these private equity real estate investments available to middle-class people, everyday people, with small amounts of money. $5,000 is the minimum per investment, and open to all non-accredited investors, not just wealthy or accredited investors. So that's one core value. The other core value is diversification. So we mean that in every sense. So geographic diversification, we try to invest in many different markets around the country. Sponsor diversification, we try to spread money among a lot of different sponsors rather than piling it all in with one sponsor. Property type diversification. So obviously a lot of these are going to end up being multifamily just because that's the bread and butter of real estate syndications. But we also do retail, industrial, storage. We just did a portfolio of mobile home parks, and vacation rentals, hotels. I mean, you name it, we've done it. So that is really big to us as well. We want to make it easy for people to spread small amounts of money among a lot of different deals in many different states, cities, property types, etc. Because what I have found over the years is that every time I try to get clever with my investments, the universe gives me a big old slap across the face.
Like, just do the basics, man.
Yeah. So, I don't know what the market is going to be like in a few years in any one of those asset classes or any one of those cities, but I do know that, if I spread my money among, very good looking deals that we have vetted well, right, as a club, that it's just going to be a bell curve of returns. Some of them are going to underperform. Some of them are going to overperform. Most will be in the middle of that bell curve. And it's an easy way to sleep at night when it's just averaged numbers on a page, and you're not all tied in, a whole bunch of your money tied in with one investment that if that investment goes south, you're in trouble, right?
Yeah.
So,
yeah, that's a smart way to do it. How do you guys vet your GPs? How do you select your GPs?
yeah, I mean, the first thing we do is we look for GPs based on word of mouth from other GPs. So, every time we talk to a GP, the last question we ask them is, hey, who else do you know, like, and trust in this space? Maybe people who you've invested your own money with personally as an LP. So right off the bat, we're getting recommendations from peers within the industry. So, people who are experienced and, very tied in with this space, we're getting their recommendations. But we have to be really clear that we are not vetting either GPs or deals on behalf of our club, because we want to stay away from that line of selling securities, right?
Yeah.
So yeah, we vet all of these deals and all GPs together as a club. We bring the GP in to speak directly to the club. Club members grill them with questions on their own, and of course we grill them too. But yeah, it's a collective group effort within our club.
Cool. Right on, man. Well, I love the idea. I'm going to take that opportunity and move us on to the quick question round. Are you ready?
I'm ready.
Let's do it. It starts with books or any form of education. I need 2 recommendations, one for general life wisdom, and then one for real estate or business specific.
All right. So I really have been enjoying the Life of Money show, which is hosted by the team at Good Egg Investments. It's sort of the intersection of real estate investing and financial independence and lifestyle design, which is what I'm all about, right? I mean, I love that, bringing that intentionality in. So check out the Life of Money show podcast. I love, for entrepreneurs, I really like Traction by Gino Wickman. It's a great book for anyone looking for like a systematized way to approach their business, even very small businesses. And I'll throw out Personal Success Made Simple by Brian Tracy as well. It's a classic.
Cool. Yeah, this is a good recommendations. Brian Tracy is always. I remember I used to. He was one of the first guys that I like when I first got into like the books that self-help kind of, not self-help, but those
Personal
motivational
yeah.
kind of books.
Yeah.
Brian Tracy was one of the first ones that I read. Him and Zig Ziglar, and I really like those books. All right, moving us on to the next question. This is for your younger self. So let's go back to the Brian who was just getting started out. Back with the, what is that, 2005? You said when you got into that the mortgage company or the hard money loan company. Go back to him, look him in the eye, give him
I'm dating myself here. Graduated college in 2003.
Oh, nice. Give him one piece of advice moving forward.
I would say get expert help in in whatever endeavor you're trying to do. Don't try to go it alone. Don't try to be the maverick or the lone wolf. When you're young, you're so arrogant, right? You think you can just figure everything out yourself, that you can totally go it alone. And you can't. You get help. Talk to someone who's been there before. Talk to many someones who have done what you're trying to do already, and have them steer you around all those pitfalls so you don't have to make the same expensive mistakes that they made.
Yeah. Yeah, you can do it on your own, but it's going to take a lot longer than if you got help.
and cost you a lot more money. I mean, in mistakes and
Yep.
missteps.
Yep. All right. Next question is about your business. The first three positions you hire form the foundation of your business. So, what were they for you, and would you do it differently in terms of order if you did it again today?
Yeah. So we, I would say the first person that we hired was actually my partner's daughter, uh, who helps us with marketing and is still with us today, and she's wonderful, super hard worker. So she's basically a like a marketing Swiss Army knife kind of worker who is there to help support me. I do a lot of the marketing for our business, where my partner does more of the operational and behind the scenes stuff.
Hmm.
Um, so yeah, her daughter Tara, really helps me scale some of our marketing stuff. Um, so yeah, a marketing assistant basically is, if I'm going to narrow that down to one person. A VA can take a lot of that like rote, low skill level work off your plate at a very low cost. So yeah, I would recommend that everyone go out there and just do like an audit of your day, right? What are you spending time doing that's low skill stuff that you can pay someone in another country a very low hourly rate to just take off your plate for you. And you can train VAs up over time. A lot of people don't talk about that or realize that enough. That VAs start with a low skill level, but that doesn't mean they have to stay that way, right? Like you can take someone who's a VA and gradually ramp them up and teach them the skills for your specific industry, uh, and have them become a high skill employee. And you pay them better, of course, over time, but you're still raising them up from a low starting point. So very affordable help on that end.
Yeah. Yeah. VAs
And
are super important.
yeah, yeah.
I actually got it. I think it was the last person who hopped on the podcast. They gave a recommendation that South Africa is a great place to get VAs because they have if you're asking them to get on the phone and do things for you, they have a pleasant accent, and they are relatively inexpensive. They have a good work ethic. So I never thought of South Africa. I always do the standard one, go to the Philippines, but I guess South Africa is a good place to look for VAs.
It is. I mean, so you have a lot of native English speakers, of course, in South Africa, who it's their mother tongue, right? So they're not speaking English as a second language. It is a beautiful accent. Um, and I mean, South Africa, their economy is run so badly that their currency is just a mess, and it has been for years now. So
Oh wow.
there's a good exchange rate from the U.S. dollar to the
Ah,
rand, the South African rand.
yeah, that makes sense. All right. Next question is about the US. It's a big place, a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Oh man, I just went on that huge rant about how I'm location agnostic.
I know. And I know you're going to have to whittle it down.
Yeah, so I mean, this is a year when most investors have really switched their focus to income investing in the Midwest, which I am absolutely supportive of. Everyone wants to see that high yield right off the bat, makes them feel like it's lower risk, which it is. And I'm pretty skeptical of investing in growth markets that don't cash flow well
Mhm.
anyway. Um, so I like those Midwestern markets of like Tulsa and Indianapolis. Indianapolis is probably a little bit too discovered at this point. But there are some good markets in Kentucky. I mean, so I mean, I don't know. I can't pinpoint one market that I think is great, but we have seen a lot of strong cash flowing deals in the Midwest and in the Southeast.
Yeah. Yeah. I like, we have a self storage facility in Indianapolis, and we're looking for more because I really like that metro. But yeah, I feel like it has been a little discovered. Like people are really, really trying to find or buy deals out there. All right, moving us on to the next question. This is about finding deals. It all starts with getting in contact with the seller. In your case, getting in contact with the GP. What is your favorite way to source new deals from GPs?
Oh man, well, so we did cover this already. So my main one is word of mouth from other GPs.
Mm-hmm.
That being said, there are a couple podcasts and communities that I'll give a shout out to. So I mentioned, our competitor in quotes, if you will. Left Field Investors, great community, great forums, and there are some fantastic threads and conversations on there specifically about GPs. And if you're looking to vet a GP, that's a really good place to say, hey, has anyone invested with this person? Have they messed up? Have they done capital calls? How have they treated you as an LP? Et cetera. So I'll give a shout out to our competitor. Um, Bigger Pockets is an oldie but goodie. I really like. So the Left Field Investors, they have a couple good podcasts for finding GPs. Sam Wilson's podcast called How to Scale Commercial Real Estate, great place to find GPs as well. He used to do it daily, a daily real estate investing podcast. I don't think he
Man.
still does it daily because it's too much
That's a
work,
lot of
right?
work. I
It's
tried
too
that
much
for like
work.
2 weeks, and then I was like, nah, it's not for me.
It's too much. But Sam Wilson is a great guy. He's a friend of ours, and it's a wonderful podcast. Brings on some really smart and interesting GPs, some of which are doing creative and different stuff. So, because he puts out so many episodes, he has talked to a ton of people who are super fascinating. So check out that podcast as another place to find good GPs.
Cool. All right, second to last question. This is about lessons learned. Not every deal we go through goes the way that we expect it. Sometimes, things hit the fan and a deal goes sideways. But in those deals are the biggest lessons that we learn and take on to the next deal. So, what was a lesson learned through a deal gone sideways?
Yeah. So one thing that I have learned this year is really to hone in on how sponsors are approaching risk, and just trying to be aware of the greatest risks in that market. So, for example, as we're in the end of 2023 now, everyone has started talking about insurance premium risk, right? And how insurance premiums have just gone through the roof across the country. But even 6 months ago, very few people were talking about that. And that was something that we started asking people about early on. When that kind of came on our radar, is talking about, what risks are you seeing that not enough people are talking about? Asking sponsors that question, and then trying to press them on things like, how are you approaching the risk of your expenses rising a lot faster than rents? There are markets in this country where rents are declining right now, but expenses are actually going up much higher than the historical average, right? Insurance premiums being the easiest example of that, but labor as well. Labor costs have been rising a lot faster than the historical average, and certainly faster than rents over the last year or two. So, asking about what risks people see in the market, how they're mitigating those risks. Interest rates are, of course, another example of this. We've been talking about those for the last year and a half, 2 years, in this industry. But, one thing that we found this year is that not enough sponsors had been taking the risk of rates staying very high for a long time. They weren't taking that risk seriously. From like 2022 until maybe the first half of 2023, a lot of people in this industry kind of assumed, oh, interest rates are up right now, but they'll come down. They'll come down quickly. Interest rates always go back to zero, pretty quickly. And that's just not true. I mean, interest rates could stay high for a long time. So how are sponsors approaching that? How are they protecting against that risk? Are they getting longer term loan or debts, or taking on longer term loans to be able to extend that runway, if you will, or extend that period of flexibility where they're not forced into either refinancing or selling in a year or two from now, when rates might still be really high and exit cap rates might be high. So that's a long-winded answer to your question, but just trying to evaluate how sponsors are approaching risk and how they're mitigating that risk. How many angles are they approaching these problems from? To protect themselves? How many contingency plans do they have in place to protect themselves and to protect your money ultimately?
Yeah. That's another reason why creating a bunch of different models when you do your underwriting, you have your standard underwriting sheet that this is what I expect to happen. This is what we're going forward expecting to happen. But then have your secondary, your tertiary, all those different models of how things could go if X happened, if Y happened. It's just a good way to run your underwriting, especially when you get into the later stages of due diligence, to understand just how things could pan out. All right, that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you, maybe learn a little bit more about your group, your club. What is the best way for them to do that?
Sure. I mean, come to our website, of course, sparkrental.com. You can also connect with us on Facebook, LinkedIn, Twitter, or X, whatever. um, you can email me personally, brian@sparkrental.com. You can also email us at support@sparkrental.com. We're a small team. It's not like I've got other people answering my emails for me. You can reach me, and I answer all of those emails personally. So please don't be a stranger. Reach out and come check out a meeting of ours. Come join a meeting. And if you decide it's not for you, we'll refund your membership fee. No questions asked. But come talk to us and the other members in person and see what we're doing, see what we're all about, see if it's a good fit.
Cool. Right on. That is sparkrental.com /co-investing if you want to learn more about the co-investing model that he was talking about. I'll put that link in the show notes. So if y'all want to reach out, just click a little more in the description. It'll pull down that full description. In there, you can find Brian's link. All right, Brian, that wraps it up. Thank you very much for hopping on the show.
Gabe, thank you so much for having me. This was a blast.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe, at therealestateinvestingclub.com. And if you guys want to support the show, all we ask, give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.